there, I'm Surabhi Upadhyay and I'm a markets host with CNBC-TV18. Now usually you will find me in the studios as we track the ups and downs of the stock market, the daily roller coaster. Today, however, I am not in the studio. I am in the CNBC-TV18 Markets Cafe. This is a brand new digital offering where I'm planning to have some interesting conversations over coffee, throw in some markets, throw in some money. It promises to be something really refreshing and really interesting. So thank you all for tuning in to our first inaugural show. And let me now introduce my very first guest as well. Today, joining me on the CNBC-TV18 Markets Cafe is Gautam Duggad, who is the head of research at Motilal Oswal Institutional Equities. Gautam, thank you very much for coming in and welcome to the Markets Cafe.
Thank you. Thank you so much for having me.
Usually we sit you down in the studio, then we start asking you what's happening with earnings season, where is the nifty going? But today we thought, take it a little easy.
Sure.
And I'm seeing that you've left your jacket and tie behind, so I think we're in the mood.
Yeah.
So first things first, it's the Market Cafe. So pehle to aap ye bataiye, what will you like to drink? Tea, coffee? We have some ginger tea.
Yeah, some coffee.
Just some coffee? Okay, great. So can we have 2 coffees, please? Long day?
Yeah, not so long actually. It's middle of the day still.
Middle of the day? The market's shut and it's still middle of the day for you?
Yeah,
My
for
God.
research guys, it's always middle of the day at
Middle of the day at, right now when we're having this conversation, it's just about after 4 o'clock in the evening. But all the glamour that we see, all the money and the razzmatazz, I guess there's a lot of hard work that goes on behind it, right?
Absolutely, because there's a lot of thing that moves behind that price sticker.
Behind that price sticker, which we track and the up and down and all of that.
Absolutely.
Phenomenal, phenomenal. So, before we get started, I want our viewers to know a little more about you.
Yeah, sure.
Now, for all these years, over a decade and a half that I've been tracking markets with CNBC-TV18, Gautam has been our go-to person. Whenever there are big moves in corporate earnings, whether sectors, there's something changing in policy, we rush to him and ask him for his help. It's been a long time with Motilal Oswal for you, right?
Yeah, so actually I've completed 11 years just last week with Motilal Oswal.
Oh, congratulations.
Yeah,
long stint.
Thank you. Yeah.
And how long in the equity markets before that?
So,
you were also working with a couple of FMCG companies, weren't you?
Yes, no, so I worked with one only. So I
Okay.
started my career with Procter & Gamble. So that was my first job, 2005 to 7, after I finished my studies from IIM Calcutta.
Okay.
And then 2007 August is when the market bug took over.
2007.
2007 August.
The super
right
euphoria.
in the middle of the
big
euphoric
ride.
bull run
Okay.
of 2007-8.
Oh yeah, how can we forget?
So now almost 16 years into the market.
16 years
Out
in the
of
stock
which
market.
you can say first 8 years I tracked consumer as an analyst, and last 8 years I have been head of research and strategist.
Still like it?
So yeah, I mean 50-50 basically, sector and strategy both. So I now handle head of research responsibilities and also write on strategy and do a lot of team related responsibilities.
Sure. Okay, fantastic. Well, why don't you check your coffee?
Yeah,
That's fine, then
sure,
we'll get going.
Perfect.
So, Gautam, so one of the reasons we thought we want to have a different conversation with you today is that there's this growing buzz in the market in terms of what next, what's the next trigger, or aage kya aane wala hai. Everybody's now beginning to talk about elections,
Correct.
right? Some activity has started. We've started seeing some policy changes. LPG prices, for instance, 200 rupees ka cut aa chuka hai wahan pe. And I think increasingly people want to know whether this buzz will increase and whether you need to start looking at your own portfolio differently. So that's one of the main reasons we thought we want to sit you down and try and understand that. So first basic question, what do you think? Is there a clear correlation between elections in the country and the stock market?
Oh, definitely there is in the short term. Definitely there is a big correlation because election is such a big policy event for markets. Because elections decide the outcome of who is going to run the government, which in turn decides how the economy can function, because different parties have different economic ideologies, right? Whether you have a stable coalition, whether you have an very fragmented coalition, or you have a single party majority. That has a significant implication on how the economy functions, how the policy momentum for the economy is, and ultimately market is a subset of the economy. So I am a firm believer that from a short to medium point of view, term point of view, you have elections, which is a very important event. However, if you are looking at the markets from a very long-term picture, say 10, 15 years, then obviously elections will come and go. Then the only thing that matters is your corporate earnings, because that's the single largest driver of market.
As long as
But in the
companies
short
make
term,
money,
yes.
stock
Yes,
prices move higher, and
definitely,
it's just a no-brainer, right?
Yeah. I mean, you've seen that happen already for last 10, 15 years. So many events have happened politically, geopolitically, crude going up and down, governments changing multiple times, right? But look at it this way, 2010 to 20, and this is my favorite data point. Nifty gave you a return of 8.5% compounding.
2010?
10 to 20, FY 10 to 20,
Okay.
10-year period.
Whole 10-year period.
Yeah. And that point of time, the corporate earnings corresponded to just 6.5%, right? 2020 to 23, FY 20 to 23, markets have given you 27% CAGR.
Which has been a phenomenal period for the market,
but it's been
right?
backed by an equally phenomenal earnings CAGR of 23%.
And imagine coming out of COVID, when it
Yes.
seemed like the world is ending,
Absolutely.
we came back with a bang.
Yeah. So
big
market
move,
over a very long period of time has broadly tracked earnings.
Okay.
In between, a lot of things drive the markets on a day-to-day, quarter-to-quarter, month-to-month basis.
Yeah.
Politics, how the commodities or how the interest rate or what Fed is doing, etc., etc.
And elections is one of those kind of
Yes,
triggers.
but it's a very big event.
It's a very
in
big
the
one.
short term, very big event.
You know, I was reading a pretty interesting piece of research written by Chetan Nair of Morgan Stanley. I mean, he's one of their key strategists. Sure. Now, he did some research for the US market. He went back, I think, saw data over 100 years to figure out how the US market reacts to elections, if there's a correlation there or not. Now, interestingly, his thesis is that, at least in the US, stock markets are not partial to any particular party. I mean, sure, there was some data that came up that I think stock markets over a 150-year period, they rose more when Democrats were in power than Republicans were. But I think the point that he was making, at least with that market, is that it's not so much about which political ideology, but there was an interesting trend that whenever the incumbent government was continuing, markets kind of ambled along, kind of lost some momentum, and wherever a challenger was coming into power with some interesting fresh ideas, the US market had a little more kind of momentum coming in. Is there any correlation between ideologies at all? I mean, does that even matter? I mean, how does the market read a change in government or a change in the political dispensation?
So this is very contextual, Surabhi, because we are talking at this point of time where we've had 10 years of a single party majority government after like 25 years. 1989 was the last time we had a single party majority. After that, there was a 25 years of coalition era, right? Then 2014 till now, we've had again 2 consecutive terms of a single party majority government. So in our case, the conclusion and therefore the understanding, you have to always keep the context in mind, right? Because we came to 2014 after a period of a very, very subdued macro, you can say. There was terms like policy paralysis were being used. There was a lot of issues on the governance, corruption, and all of that, right? So coming from that background, we actually had a single party majority government. Now, last 7-8 years, you've seen multitude of reforms, really big picture reforms. GST, RERA, IBC. And digitization, payments revolution, digital infra, physical infra. So at this point of time, I think markets will value continuity. Having another term for a majority single party government, that is something which market will really value. But going into the past, I mean, because I was looking at some data points. If you look at the last 5 elections from 1999 till 2019, right? So almost 25 years, 5 different elections. And if you look at the data for markets, just 6 months before the election, that is the day of counting and announcing of results, right? So if the results are going to be in, say, May 24, you will look at it from November 23 to May 24. You go backwards, last 5 such elections, 99, 2004, 9, 14 and 19. Every 6 months prior to election, market is rallied.
That is why we have you here, because we're just at that phase, right? 6-7 months before the election.
The magnitude of rally has been very different. So if you look at 1999 till 2004, or rather 99 election from you can say May 1999 till October 1999, because that time elections happened in October 99. Markets rallied 36%.
In 99, 36%?
Yes, 36%.
Wow. Okay.
2004, the market rallied just about 10% before the results.
And 2004 was the, I mean, I was also looking at immediate reactions on the day before the date.
No, we are right now talking just before the election results gets announced.
Period. And that was the India
build-up
phase.
period, yes.
I remember, yeah.
2003, October or November till May 2004, markets rallied 9-10%.
Okay.
2009, you've had a huge 31 or 32% kind of a rally, right? Then 2014, again, you had a 20% rally from September or maybe November till again May.
Going
exact
into
6
the
months period, yes.
Yeah.
And 2019, you had a 10% or 11% rally.
Okay.
So 5 consecutive elections from 1999 till 2019, markets have always rallied 6 months into the election, counting on the day of announcement of.
Okay, so Gautam, this is really, really interesting. What you're telling us that at least in the last 5 election cycles, the market has rallied going into the event.
Yes.
At least 6 months. 6 months a rally basically shuru ho jati hai. Which is good because we have you at the right time, because now I can ask you how to start preparing for this rally.
So last 5 instances have been very clear. You got rally ranging from 9-10% to about 36% way back in 1999. 2009 I would also categorize as a very unique year, because there is a year when elections also coincided with the recovery that we saw from the GFC crisis.
Global financial crisis.
2008.
Yes.
Right? We,
yes,
I think, bottomed out somewhere around October 8. Sensex was some 8,000, I think, if I remember well. And market started rallying after that.
Yeah.
And that period also coincided with that pre-6 months to the elections period.
Right.
And it continued after the election, because the UPA government got the majority in 2009. Market hit a upper circuit of 20% after the election.
I remember that, yeah, because I think that was the period where the election result was announced over the weekend. Market came back with a bang.
Yes.
And that Monday was like, it was just completely insane buying happening on that Monday. So yeah, 2009 was pretty historic in terms of the reaction that the market had to elections.
Yes. And then it continued, because you got some 31% rally 6 months before the 2009 elections. If you look at 6 months later, the markets rallied another 36%. So that was a very unique year, because it also was the year where entire global markets, they rallied after the 2008 correction.
Because we were coming out from the mother of all financial crises in 2008, and then there was a period of recovery.
But rest of the periods, the other 4 periods, 6 months after the elections, you got very muted returns. Right? Like 2004, after 6 months, the market is up 8-9%. 2014, about 15-16%. Because there's a major change in power. 2019, markets were flat 6 months later.
Because it was continuity. It was sort of same government continuing with its policies. So market wasn't too excited, from a political and from a policy standpoint.
It is just continuity. Market digested the election results quickly and moved on from then.
Basic sort of thing to ask here is that now that you've told us that history is proving that typically there are rallies going into the election. So it's only logical, right, that we need to check our portfolio, maybe make some tweaks, maybe add some of the hot sectors. Would you agree?
No, I would agree, because Surabhi, this year, 2023, particularly the mid-cap and small-cap indices are already up 25 to 26% YTD, from January till September. So it's not as if that we've not rallied. We've already rallied, especially mid-cap and small-cap. Nifty, sensex, they've been relatively more subdued. Relatively, the valuations are also more attractive in large caps today. Your mid-cap index is trading at a 15% premium, right? And mid-cap, you can see a lot of subspaces, categories, sub-segments, they've heated up a lot. There are stocks which have rallied 60, 100, 200% in a matter of 8-9 months. So I would rather say and categorize it a bit differently, that if you're looking at the period going into the elections, then probably large caps today offer a much better risk reward purely on valuation basis.
So I just want to give you a sample of questions coming in. It'll give you a sense of the excitement out there on social media as well, right? Viraj Joshi is saying, which Indian companies will benefit more from elections? How do I build my portfolio? Priyesh is saying, do stocks like Pratap Snacks or Patanjali Foods, FMCG in general, does this sector benefit ahead of elections? Hiren is saying, should one be buying more paper? This is really interesting, paper or media stocks, because the amount of advertising, political advertising, tends to go up. Commonsensical questions. So, you know, our viewers are pretty excited. So, help us wrap our heads around this. What to buy before the election?
See, so basically, your sectors are not so dependent on elections. You will have a few months here and there where elections decide the fortune of the sector. First of all, you should not build a portfolio for elections.
Okay.
You should have a portfolio before elections also, and after elections too.
Absolutely.
And maybe you can make some tweak here and
Some
there,
little
depending on
changes
your
here and there.
understanding of different sectors.
Okay.
So typically, if you notice, going into the election, governments are always very hyperactive on spending,
Yes.
be it infra or be it consumption, because they always want the consumer sentiments to be upbeat.
Right.
Infrastructure has been recovering after a long time. I mean to say the capex cycle.
Correct.
The private capex cycle, which has been very subdued for a large part of the last 7-8 years,
Right.
has started recovering in the last 12-18 months, and which is why you've seen industrial stocks, stocks belonging to the infrastructure, capital goods, defense, those areas, they've already done phenomenally well in the last 12-18 months. So I wouldn't really hazard a guess as to which particular sector you should zero down on and then, mark it with the election brush that this is a sector for election and this is a sector for perpetual, sort of portfolio.
Yeah.
I wouldn't do that. Okay. Yes, at the margin, you can say some of the infra spending will definitely get accelerated as you head into the election season. Sure. Also remember the fact that there are 4 state elections in November, December.
Yes.
Right?
Yes.
That will also see a lot of spending from government as well as the candidates who are fighting those elections.
Right.
So a lot of money gets spent in all these elections, which ultimately trickles down to the bottom of the pyramid.
Yeah.
Right? And we have seen in the past that because of the election spending, after some lag, you generally see consumption picking up. So infrastructure, consumption, these are 2 broad buckets where I would sort of say elections generally benefit. And then you have financials which are already on a roll. Banking has been a bit subdued. But do remember that in terms of corporate earnings, the banking, financials, NBFC and non-lending stocks have already done really well in the last 4-5 years. And this year also they're expected to do well on earnings.